All right, guys, welcome to my YouTube channel at the Murchison Method. Today, I am going to discuss exactly what owner financing is, what are the advantages for the owner, and what are the advantages for the buyer. And I'm going to give you a live example of a deal that I did here in Georgia. It actually was my first real estate deal when I moved here to Georgia. Now, before we go over that, like and subscribe my YouTube channel. I am putting out free content every single day. All right, guys, I'm going to go over exactly what owner financing is. This is also called seller financing, okay? Now, this is when the owner of the property finances the purchase directly with the buyer instead of getting a traditional loan or any other type of loan. Now, basically, instead of a buyer going to a Chase Bank or a Wells Fargo to get a mortgage loan, the seller is going to act just like them, just like Wells Fargo, just like Chase, because they owe nothing on the property. And instead of getting a loan with those banks, he's going to act like the bank and loan you the money to buy the property from him, okay? Now, essentially, the owner is also the seller. It's the bank, just like what I explained, okay? Now, the advantages for the seller. A lot of people say, why would a seller do this, okay? There's a lot of tax benefits on doing owner financing. Now, if the seller wanted to sell the property outright, he would have to pay a whole bunch of capital gain taxes because he's getting a lump sum of money. Now that he is only getting his profit monthly by owner financing, he don't have to pay that much taxes, okay? Now, the seller still wants the monthly income without the hassle of dealing with tenants and maintenance issues. A lot of sellers really don't want or need the cash. They're just tired of dealing with being a landlord, dealing with tenants, dealing with maintenance calls, dealing with people not paying, okay? So they love that monthly income. They just don't want the headaches of dealing with tenants, okay? Now, the advantages of a borrower or the buyer. Faster closings because you don't have to wait for a lengthy closing process or underwriting. I mean, I did a deal where I closed in 2 days. I met the seller. He wanted to do owner financing. We closed the next day. So could be very fast. Flexible down payment. You can, but with lower down payments, sometimes no down payments, okay? Now, it depends on how you structure the deal. Some owners going to require just a small down payment just for a little bit of skin in the game. Once you build rapport, then they may not require any down payment at all. It's cheaper closing costs. There's no bank fees, no appraisal fees, no inspection fees. So you're going to save money on all that when you do owner financing because the owner, this is his property. He knows his property. He don't need to waste money on that stuff. Alternative for buyers who can't get qualified for a mortgage. So let's say you have bad credit, you don't have the documentations to show to get approved for a traditional loan. You don't have to do that with owner financing. Doesn't show on your credit report, so it doesn't hurt your debt to income ratio, which is great. My first 100 units, all owner financing, did not show at all on my credit report. So when I finally applied for a traditional loan, I told them I had 100 rental properties. When they pulled my credit, they didn't see not one mortgage. They said, how do you own all these properties? And I told them it was a owner financing. That's why it's not showing. So that's a great thing about owner financing. Doesn't mess your debt to income ratio up if you try to do other things and purchase other things. And in most cases, these sellers become your private lenders, what I went over on the last video, okay? Because you are building a rapport with them, because private lending, like I said, is all about building rapport, relationships. Because you are doing great business and owner financing, you are building a rapport, you're building a relationship. They will become your private lenders if you want to do other deals that don't involve them selling it. Now, here is an example of my first real estate deal and owner finance deal when I moved to Georgia back in 2011, okay? I sent out my direct mail letters, and a lot of owners called me back, and one owner called me back. He had a duplex. Purchase price was $55,000. He wanted me to put some skin in the game because, of course, he didn't know me. So he wanted to put some skin in the game. He wanted a down payment of $5,000. So my loan to him was $50,000. Okay, he didn't need the money. He just wanted the monthly income and the interest every month. Okay, now his interest rate was 8%, which is amortized over 30 years. Okay, now the term was a 3-year balloon payment. So basically, even though my loan was amortized payment wise over 30 years, I had 3 years to pay him off either by refinance or selling the property. Now, within those 3 years, I paid on time. He likes the way I do business. He had the option to renew the loan for another 3 years, as you can see here, with the option to renew. That's how I structure all my owner finance deals as well. Now, my monthly payment to him was $366.88. My monthly income was $900. Okay? My profit was $500. Great deal. No brainer. Great cash flow for one piece of property with little money down at my pocket. To this day, I use this lender on most of my deals here in this area. He calls me whenever he wants to sell a property and do it on a finance, because I built that rapport, that relationship with him when I started back in 2011, all the way up until now, 2025. So this is a great way of buying property as owner financing.